Welcome to the Reasonable Southerner podcast. The South isn't all magnolias in the moonlight, but neither is it all racism and violence. We are just like you. My name is Frances Coleman. I share my insights about my life and yours. Let me say this right off the get-go. I am not unsympathetic to the people who are horrified by the specter of skyrocketing federal flood insurance rates. And why would I be? I live a mere 25 miles or so from the Alabama Gulf Coast, and I understand two important things: that coastal economies depend on tourists and a healthy real estate market, and that people love living or vacationing on the water. I have friends with homes on the Gulf of Mexico as well as on local bays, rivers, and creeks, and while some of them are wealthy, many of them are not. Nevertheless, as the Bible says, it rains on the just and the unjust, meaning, in this context, that whether they're rich or not so rich, a lot of people in South Alabama who live on or near the water are about to pay substantially more for flood insurance. You can read all about it in a recent New York Times piece titled, "The Cost of Insuring Expensive Waterfront Homes is About to Skyrocket." The headline pretty much tells the story, although the article explains in more detail how the Federal Emergency Management Agency, which oversees the federal flood insurance program, decided 2 years ago that it was time to price flood insurance more realistically. Why? Well, besides the fact that inland residents help subsidize flood insurance so that rich people can build expensive waterfront homes, FEMA is also reacting to another, even more important fact: that climate change is real and that its effects are already being felt throughout the United States. One of the ways in which it's being felt is a gradual rise in sea levels. In addition, meteorologists believe climate change is making itself known via stronger and more frequent hurricanes. Scientists say that because of global warming, hurricanes are likely to be stronger, reaching Category 3, 4, or 5 than in the past. They are also more likely to stall or slow down dramatically as they move ashore. Remember Hurricane Harvey in 2017? It inundated parts of Texas with more than 60 inches of rain, causing about $125 billion worth of damage and killing more than 100 people. And then there was last year. 2020's hurricane season was the busiest on record, with 30 named storms. No season had ever exceeded 28. Poor Louisiana saw 12 make landfall, including Hurricane Laura, a Category 4 storm that absolutely ravaged Lake Charles. In Alabama, Hurricane Sally roared ashore in mid-September as a high Category 2. Normally, a Category 2 storm isn't a real big deal around here, but as it came ashore at Gulf Shores, Sally slowed down, way down, and became what one news outlet referred to as a disaster in slow motion, dumping 20 to 30 inches of rain on coastal Alabama and northwest Florida, plus producing a storm surge of 5 to 7 feet. Repairs and debris removal are still ongoing in Alabama a year later. So you can see that together, rising sea levels and stronger, more frequent hurricanes mean more damage more often to waterfront properties. And that means more insurance claims and payouts on the part of a program that is backed by your and my tax dollars. That's why, despite the pain that rate increases will cost individuals and coastal communities, it's time, past time really, for rates to reflect reality. Here's a great example from the Times article, which cites the case of a Florida woman who lives in Tampa. As most folks know, when lumped with St. Petersburg and Clearwater, the Tampa area is a huge population center on Florida's west coast. The Times identified Jennifer Zales as a Tampa real estate agent who currently pays $480 a year for flood insurance. Under FEMA's new system, however, her flood insurance will eventually cost more than $7,000 a year. People and politicians who are appalled by the increases say Congress should intervene and slow down, reduce, or even eliminate the coming rate hikes. To which the rest of us, the poor slobs who don't want or can't afford to build on the water, should say, "Are you kidding us? You want us to help you insure your beachfront homes so that when rising sea levels and big hurricanes wash them away, you can rebuild them? And we can help you insure the newly built structures in case they too get washed away." Well, speaking on behalf of those poor slobs, no. Your admittedly painful choices can include paying the higher, more realistic flood insurance premiums, self-insuring if you don't have a mortgage, selling your waterfront home, or deciding to build or buy somewhere that's not quite so vulnerable to flooding. These choices should not include continued artificially low premiums. The rationale behind the federal flood insurance program made some sense back in 1968 when Congress created it, and it makes some sense today. It can help communities from being wiped out, both in economic and human terms, by natural disasters. It also can help raise construction standards. Florida is certainly a poster child for flood insurance reform, but my own state of Alabama, although it has far less coastline, has its own example of the program's weaknesses too. Indeed, in 2012, the Times referred to the state's only barrier island, Dauphin Island, located south of Mobile on the Gulf of Mexico, as, quote, one of the most hazardous places in the country for waterfront property. Yet, despite massive destruction by Hurricanes Ivan and Katrina in 2004 and 2005, respectively, and periodic damage from lesser storms, construction of new homes on the narrow island remains steady. In a best-case scenario, the federal government and advocacy groups would work together to buy up coastal properties around the country rather than continue to insure the structures on them. In a worst-case scenario, costlier insurance would make it too expensive for most people to live on the water. In any scenario, however, Congress should allow flood insurance reforms to proceed as planned. Higher insurance premiums may not cure the program's woes, but at least they will better reflect the real cost of living on the beach. Does it make sense for the government to guarantee flood insurance in a way that allows people to be insured when the insurance market itself would simply not provide that insurance that cheaply? To some degree, yes. However, that insurance has to begin when public policy makes rebuilding communities after a flood or a hurricane a good thing for everyone. That insurance has to end when there is no real value for the rest of the country to keep spending money to rebuild communities that are going to flood over and over. How can we know where these beginning and ending points need to be? Putting more of the burden on the people who actually have the property that must be insured is a good place to start. The cost of that insurance was there all the time, only taxpayers all over the country were helping pay the premiums. Not getting as much free insurance is not going to make a lot of people happy. However, happy is not what this is all about. Shifting more of the burden to the people who benefit from the insurance may not make property owners happy, but it will make them pay more of their own insurance cost. That may not make them happy either, but having to pay for what you get seldom does. I'm Frances Coleman. I've worked for newspapers for more than 45 years, from Texas to my native Louisiana, and finally to my home near Mobile, Alabama. I've been a reporter, an editorial writer, a columnist, and an editorial page editor. I've commented on the BBC, been a guest on the Rachel Maddow Show, and had my column distributed nationwide. If you like this podcast, please follow it. It's free, and even if you don't like it, I hope you'll find it thought-provoking.